What's up, everybody? This is Dre with Brothers United in Leadership Development, Bill 206. It's another episode of Bill Black Wealth Podcast, and I'm here joined with my good friend and one of our instructors of one of our workshops. She did a workshop on life insurance and estate planning, the lovely Tyona. Thanks, woo, woo. Thanks for joining us.
No problem. I'm glad to be here. Thankful for the opportunity.
Yes, for sure. So tell us a little bit about your background and the industry that you're in, and how you kind of got involved in that.
Okay. So I've always worked in finance, in the finance world, and I was a buyer for like 20 years, and I think I went through like an epiphany in life where I was kind of like, what am I doing with my life, and where do I want to go, and what goals do I have, and where do I want to see myself? My son went to college, and things kind of slowed down, and you pour into your kids, and then when it's time to kind of look at yourself and like, what do I want? So I kind of did that. I was like thinking about finances, where I wanted to be, where my goals were, and realized that I wasn't even like contributing my full max of my 401k at work and all of these things. And so I lost my mom, and she didn't have life insurance. And then, so that was my first experience with dealing with life insurance or not having it and all of these things. And so then a little while after that, I found myself in a position where I didn't have life insurance. I always had it through a job. And then I went and got life insurance on my own. And I was like, how many people don't know how to do this?
Right.
And so I was like, what if I could teach people how to do this or help people have these resources? So that's kind of how I got into it. And I had to study and pass a state exam, and that was a lot after, just going to a job every day and not really having to study or take tests and things like that. But it was rewarding, and it was nice to learn something new and grow and elevate,
How long have you been doing it?
I've been doing it for a year now.
Okay.
Yep.
So what is your motivation? You kind of touched on some things, but I wanted to give you a little bit of room to elaborate. Like, what is your motivation for doing the work that you do, and who do you do it for and why?
I would say the motivation mostly is my mom and going through that experience. Today's actually her birthday. She would have been 60 today. So it's
Happy birthday, Mom.
I know. So what a dope opportunity to come on here and speak today. And for my family and my cousin, it was really impactful. I signed him up, him and his family, and he's like, you're the beginning. Like, this is the start for our family to build generational wealth. It started with you to educate yourself to now educate us. And so I just thought that was super powerful. And doing it for my family, the community, to educate the community, like as well as you do, is financial literacy and knowing what's out there and what we could utilize, as a community.
Dope. In your own words, why is building wealth important for the Black community, and how does your industry really tie into building wealth for our community?
It's super important. I think that a lot of other communities, cultures, races, they have a heads up. They have what they call old money. They're still spending their grandparents' money or great-grandparents' money. Like, I think sometimes we think for today, and we should be thinking for tomorrow and the next generation and all of those things, and setting these things up. And it's not just life insurance. Like, there's so many other things involved in it.
Right.
Learning about annuities, learning about IRAs, but having these things in place. So, and then let's just talk about the fact that it's tax-free. Like, this is, you're building tax-free money that's going to go to the next generation. And this is how people build trust in families. Like, you have a family of 10 and everybody has a $200,000 or $300,000 policy. And then now someone passes away. Now this family has this wealth that they can then build businesses on, and they don't have to go to traditional banks. And it's very powerful, building that for your family and having access to those funds to do what you guys need to do, send your kids to college and not be in debt.
Right, or pay off debt or not leave debt for folks or whatever.
Correct.
So, dope. So what are some common misconceptions or myths in our community about the industry that you're in, life insurance, estate planning, those types of things? What are some things that you see like you're coming across that you want to kind of dispel?
Yeah, I think the number one issue is thinking you have more time. Waiting until when you need it, then it's usually not available for you. We should be talking to the community about people getting it earlier. When you're the healthiest and you're your youngest, that's when it's the most affordable. Don't wait until you're 60 with diabetes to try to decide now you want life insurance. So, or that it's expensive. If you can obtain policies while you're younger, then it's not as expensive as it can be as you get older. Another thing is that I've heard is like it's a scam, or it doesn't work, or they'll take my money, or things like that. And the main thing is that if you have a policy, who knows that policy exists? If only you know, then how do they pay out your family?
Right.
So putting those things into place, sometimes with certain financial advisors or life insurance agents, they'll work with estate planner, lawyers to kind of put those things in play. And then that opens up another door to start talking about who's your power of attorney, who makes decisions if you're medically incapacitated to make those decisions. That's the most important part, to have all these things in order,
Yeah, share a little bit about why it's more expensive, or why you recommend folks get it when they're the most healthy, because people hear that, but they may not really understand what it means. So I think it's an opportunity for us to use this as a learning, teaching moment.
Yeah. So basically, when we're older, you're more of a risk. With anything, everybody's doing something for some reason, right? So if you're getting life insurance at 20, when you don't have any health issues, you're not a smoker, all of these things are basically rewarding you for being healthy. Now, I look at life insurance like you're buying money. You're buying money for pennies on the dollar. So if you're buying a policy and it's $20 a month, the likelihood of you passing away at 20 is lower than a 60-year-old trying to get life insurance with health issues. And so the thing is that if you get $1 million policy and you're 20 years old, you're probably going to pay in that for at least 30, 40 years, or at least that's the hope.
Right.
A 60-year-old with diabetes, they can't pay into their policy long. They get $1 million policy, which they wouldn't be approved for one, but they get $1 million policy and they pay into it one time, payment of $100 or $200. Now the company has to pay out $1 million because you've paid one premium. That's not beneficial for any business. So the longer you can pay into it, they'll give you a lower amount. If you're trying to get it in your last stages of life, then
I heard you say something about smokers. I'm assuming if people smoke or whatever, the policy's more expensive no matter what age you're at.
Correct.
So there's a higher risk.
Correct, a higher risk. There's a couple different risk buckets, as they call them, and some companies you're completely uninsurable depending on what things you have going on, health issues or anything like that. So yeah, if you're healthy, young, non-smoker, that's your bet. And you can tie into a 20-year policy. And another thing people don't realize is, depending on what company you use, is that you're essentially locking in your health and your age at the time you apply. Right. So there's some convertible. That's another thing, is educating yourself on the different types of insurance. I talk to a lot of people, and I'm like, my grandma got a policy on me. Okay, well, what does that look like? Right. How long has your grandma been paying it? What's the death amount? What's the face amount of the policy? Some people don't even know those things. Right. Your grandma could be paying for burial. You only get $10,000, but she's been paying $100 for 30 years. Right. Let's try to figure this out. Right. So, just figuring out what type of insurance you have. But there's a term insurance you can buy. Term is like renting a house. Term is you're just kind of getting some insurance to have pure protection. Normally, it doesn't build any kind of cash value. It's just pure protection. If you own a home,
that's cheaper.
It's cheaper.
Okay.
Term is something that you would want if you own a home and you have a family. Like, you have a $500,000 loan, you want to make sure that if something happened to you, does your life insurance cover that $500,000 loan for your family to still maintain the lifestyle they're used to living? Right. A lot of the job insurances are like $20,000, $10,000. They're going to kind of keep you afloat for a while, but they're not going to do anything significant. Right. So I will always advise people to get term insurance for those kind of things while the kids are little. Whole life is something that's a little bit more permanent. That's usually can build some cash value. It kind of sticks with you. So.
And that's a little more. The premium's a little higher.
Correct.
Okay.
Correct.
And you're saying it's better to get locked in on that earlier.
Yep.
So you get the lower rates.
Yes, absolutely. So some insurance companies, when you lock into term, I know that there's an insurance company, you lock into let's say a 10-year term, and it's $30 a month. You can then convert that into a whole life policy. And that's why I always tell clients, like, even if you can't afford to buy your house right now, at least rent it.
Right.
Set yourself up for the potential to buy it. And then when you do that, you're locking in your health and your age at that time. So 5 years later, let's say you at 35, you're 30 and you lock this in, and 5 years later, you're like, yo, I have enough money. I've, established myself in my career. Now I want to turn this into a whole life. You're going to be rated as a 30-year-old instead of a 35-year-old.
Right.
So that's
even if you develop health issues?
Even if you develop
so they're going to go out that initial intake.
Correct.
Okay, cool.
So that's super powerful for people to have that information. Like, it's something you want to have. Like, nobody wants to, like, create a GoFundMe or do anything to kind of bury you or try to get your last,
Figure stuff out.
Yeah.
All right, we're going to take a quick commercial break. We'll be back here in a second with Tyona.
Get informed about your rights as an employee working in the city of Seattle. Check out Build's labor law information at www.build206.com/labor standards today.
Welcome back to the Build Black Wealth podcast. We are here with Tyona, one of our instructors from our Build Black Wealth workshop series, and she is in the industry of life insurance and a bunch of other financial products. So welcome back from our commercial break.
Thank you.
What is the most important lesson you've learned over your career? I know you've only been doing this for a year, but you said you've kind of been in finance and things that you've done, like that put you there. So what's the most important lesson that you would share?
Unfortunately, you can't help everybody. As bad as you want to, everybody is not in the right mindset to want to be helped. Or when I got into this, I was so green. I was like, oh my gosh, this is going to be amazing. Everybody's going to build black wealth, and they're going to build generational wealth for their families. And then it's like, hey, we have an appointment. And they're like, or they don't see the value in it until it's too late. Since I've been in this industry, I've had clients, I want to do it later. I want to do it later. Oh, okay. And at first I was so eager. I'm like, let's do it. And now I'm kind of like, when you're ready, you'll come to me, And when they have, unfortunately, they've had health issues. Like, oh man, the doctor just told me this. Now I got to get it. Well, now I can't really work with much because.
Or you're going to pay an extra premium for that.
Or just, I've had clients just be declined.
Right.
Like flat out. Felonies, like, believe it or not, there's certain things that just besides smoking, your health, like.
Is it all felonies?
I don't know if it's all felonies,
Okay.
but felonies sometimes can take you out the game.
Wow.
If you're out here bungee jumping and riding ATVs, just living a very risky life.
Risky behaviors, what they consider to be
Correct.
bad investment, yeah.
Correct, yeah. So that's why life insurance through your job, normally everybody's just approved because the pool of mortality is wider,
right?
And they're covering more people. So, but when it's one-on-one insurance, it's pretty strict.
But the problem with the job is it's tied to your job. So if you move on or lose a job or whatever, then you lose that policy. You can't really roll it somewhere else. I mean,
and if you pay extra money into it, it's done. So some of the things I've learned too is I can facilitate with long-term care. Disability insurance. I try to talk to a lot of entrepreneurs,
right?
Because they don't have all these things tied into their business because they're entrepreneurs. So it's like, if you're a hairstylist or you cut hair or whatever you may do, and you hurt your arm and now you can't work, how do you pay your bills?
Right.
So it's important to talk to people about the different options. I think when people hear life insurance, it's like super morbid. Like nobody wants to talk about death.
Right.
But we all have an expiration date. We just don't know
You
when.
come in and you go out, right? It's either way.
That's life. And
Right.
as bad as you don't want to talk about it, it's still going to happen, you
Right.
know? And so, but also, what else are you, like, there's other things that we have to think about. Like when we're older with this long-term care, who's going to take care of us when we're 80 years old?
Right.
What are you going to do? And if you do have 401ks and IRAs set up or whatever you have set up, how are you going to deplete that by not having things in order?
Right.
And then, like I said, speaking on disability, it's like, if you hurt yourself, how will you pay your bills?
What are one or two tips that you've learned that you would like to share with the community about your industry? Like really, like what are the top like things that you think people should know that you want to share?
I would say just educate yourself. You know, like I talk to people and either they don't know anything, or then when they come across me, now they're like, oh, I'm going to do my research. Do your research. Do your research. Learn what's best for you, which will fit with your family, you know, like all of those things. I don't ever want to pressure somebody into something that they don't want to do, you know. And like I said, getting it early, you know, locking in your health, locking in your age, to give yourself an opportunity to save money in the long run and not waiting until you need it, until you're facing health issues.
Right. What resources do you feel our community needs most when you're speaking about building wealth? I know your industry is insurance, but just in general, like what resources do you really think our community needs?
Education.
When it comes to education.
Yeah, education. And I think sometimes if you don't have these events where we're having podcasts and workshops and things like that, like self-educate, like educate
Right.
yourself, learn what this is and what this means, learn about the stock market, learn about buying a home, learn about these things that a lot of communities understand at an early age,
Right.
learn about your credit and how that impacts your life.
Yeah, and Google, YouTube University, like there's a lot of information out there. That's what I tell my son and kids I work with. There's a lot of information online at our fingertips. You don't got to go to the library no more. You don't necessarily have to talk to the professional. But sometimes you got to weed through the information. So if you have somebody you can talk to, a mentor, or somebody in that arena that you're trying to learn about, it's always good. Some of our other guests have shared, like, you know, really getting a mentor in that area to be able to help them navigate learning some of that stuff. So how can folks get in contact with you? I'll give you the opportunity to share that. It's also going to be definitely in the description and when we market it. But I want to give you an opportunity to connect with the folks and tell them how to get in contact with you.
You can reach me on IG, Tyona Cherie on IG. And then the other information as far as websites will be in the information as well.
Okay, cool. So make sure you guys reach out to her website, follow her on Instagram. I'm sure she'll follow back.
Absolutely.
So good information. We appreciate you coming out and joining us to share some of this knowledge with our community. Once again, this is Dre with Brothers United Leadership Development, Bill 206, and this is another episode of our Build Black Wealth podcast. Until next time, peace.